all of my beautiful apes and apettes. Yes, I am talking about you. Welcome back to the channel. I hope you guys are having a great weekend. But here in this video, we are going to be going over the epic battle that is about to occur between the long hedge funds and the short hedge funds within AMC stock. And I think you guys will get a ton of value out of this video, so we are not going to waste any of your time. Let's dive into it. Hit the like button for me, comment down below, and consider subscribing to the channel if you find value out of this video. If you guys want to support the channel or just get some free stocks, link down below in the description, as well as the link for the buy and sell alerts in the pinned comment. So diving straight into it, baby. This is something we did cover a couple days ago, but a big investor tripled its AMC stake and bought Apple, Neo, and Nikola stock. They are not the only hedge fund that has been loading up on AMC. And we're going to talk about in just 1 second why exactly that is, because it's pretty straightforward, but it doesn't get talked about too much here in the ape community. So it says a large European asset manager loaded up on volatile stocks in the US traded investment portfolio. BNB Asset Management more than tripled its investment in movie theater chain AMC Entertainment and significantly raised its investments in Apple and Chinese electric vehicle maker Neo and electric truck maker Nikola. The unit of Norway's largest financial services firm, DNB, disclosed the fourth quarter trades, among others, in a format filed with the Securities and Exchange Commission. DNB Asset Management, which manages nearly $70 billion in assets, didn't respond to a request for comment on the stock trades. The asset manager bought 123,545 more AMC shares in fourth quarter to lift its investment to 172,000 shares as of the end of December. So that is a big difference. So they really only owned about 49,000 shares before the fourth quarter, and they just tripled down on AMC stock. But why are they really doing that? Why are they buying AMC right now? Why are they loading up? It's simple. We are at our fundamental valuation. So if you're looking at your portfolios, and I know you motherfuckers do, if you're looking at it like, damn, I'm down 50%, or damn, I'm down 60%, it's likely, not a guarantee, but it's likely that we hit our fundamental valuation, and you will start to see even more long hedge funds start to come in and buy the stock, because after all, they have been buying the stock ever since we hit June at a very rapid pace, as you can see right here. This was December 2020 timeframe. You know, the January rally really didn't do much. People didn't really buy the stock. Hedge funds didn't really buy the stock. Pretty flat, little boost after that, but nothing compared to what we've seen in June, as well as what we have seen every quarter since June. We have not had a negative, month since June of outflows from hedge funds in AMC stock. Every single quarter, it has increased. Even when AMC dropped from 60 down to the low 30s, we still seen a increase in the hedge fund holdings of AMC, a slight one, but nevertheless an increase. Now, what we are seeing over the past 2 months is actually pretty damn crazy. Going from institutional holders about October of 140 million shares. Now take a look at that big increase, the largest increase I think we have ever seen for AMC stock, now sitting at 172,105,000 shares institutional investors own, or in other words, 33.49%. So effectively, 33.49% of the float is going long on the stock. So if, by my estimates, only my estimates, there's 40 to 80% short interest, that means it's almost a 1-to-1 on the worst case scenario, the lowest short interest at, say, 40%. It's almost 1-to-1 with long and short hedge funds on AMC stock. I have also been very clear about this, is that we should welcome the long hedge funds in AMC stock, because really, besides FOMO buyers or a potential gamma squeeze, what is going to happen is the short sellers are short on AMC. The longs want to make trades on AMC and play the upside once the MOAS actually does come, once a mega breakout starts to happen. So you're going to see this push and pull back and forth between the long hedge funds and the short hedge funds, whereas we're just going to hold our stock, hold that float, and then sell out at whatever price that we want. Obviously, that's up to your personal situation on what you want to do. But that's really what's going to move the stock. And to see this right now is very, very bullish. Something else that I want to start monitoring pretty closely again is going to be the overnight reverse repurchase agreements. Essentially what this is, if you don't know, is these banks. So if you're a bank and let's say you have $100 billion of liabilities or assets, whatever the number is, you have to keep a certain portion of your money. They actually raised the requirement, so I believe it's like 10% in cash in your reserves. So doing that, you can't just let that money sit there and do nothing. That's a liability. That's not a good situation. So what they do is they give it to the Fed overnight for 0.05% interest rate. It's very, very, very low. So they really don't make any money on this. It kind of just takes that burden of inflation somewhat off of their shoulders. But once you start to see margin calls and once you start to see the liquidity actually being constricted, you're going to see this start to drop, because this is correlating when, banks got all of this money and the economy has just been overrun with money. If we do take a look at what this used to be, it used to be virtually nothing because there wasn't a lot of extra just liquidity in the trillions of dollars out there floating around. And if you guys see the M1 money supply, about $3.6 trillion up until the pandemic, now at $20 trillion. So there's a lot of money out there and it does have to go somewhere. So pretty interesting to point out to you guys. That's the money supply. Just take a look at that. $308 billion in 1977. Now at 20 trillion. They're just astronomically high numbers. Now, as far as when this is all going to culminate into this big epic battle between the long and short hedge funds, I think it really comes down to once the business starts to show some impressive numbers and the short sellers just basically throw up their hands, say, we lost, we're just going to start covering. But it's going to happen not out of the blue. It's going to happen with some kind of catalyst. These short sellers, they're not just going to start all of a sudden covering because of nothing, right? It's going to be something that comes out, some kind of news catalyst. Well, the liquidity is restrained in the second half of 2022. If you've been following the channel, you know my whole thesis on that, so we're not going to get into that. But mix the liquidity being restricted with some kind of catalyst and the business of AMC doing well, and that's when you see this epic battle really start to play out. And when I say an epic battle, that's a drastic understatement. This is going to be massive, something you can't even fathom. But as far as the movies, I think this is going to be key as well. We only have Scream, that is a brand new movie hitting theaters in January 2021. Other than that, The King's Daughter, Redeem Love at the end of January. So 3 movies total that are going nationwide to all theaters. February, you do have Moonfall, which looks like a really good movie. Jackass Forever, 2 movies right there. Another 3 right here, Blacklight, Death on the Nile, and Marry Me. And then February, Uncharted and Dog as well. February, The Outfit, The Devil's Light. And then coming in March, you do have The Batman, Tyson's Run, Operation Fortune, The Unbreakable Boy, Downtown Abbey, A New Era, and then you do have The Lost City. And then starting in April, that's where shit really starts to get real in the theaters. April 1st, my birthday too, imagine that. Morbius, You Won't Be Alone, The Contractor, Easter Sunday, Sonic the Hedgehog 2, Bullet Train, Ambulance, Untitled Searchlight Pictures, not sure what that is, but Fantastic Beast, The North Guys, The Bad Guys, Unbearable Weight of Massive, 13 Lives. All of these great movies. And just to pick out the blockbusters right here, Top Gun Maverick, May 27th. Doctor Strange in the Multiverse, that comes out in May as well. Jurassic World Domination, that's a June movie. Lightyear. Thor, Love and Thunder, that comes out in July. So you guys get the idea here. The second half of the year in 2022 is where all of the big movies are going to start coming out. The downside to this, which kind of sucks, in my personal opinion, I was hoping it came out a lot sooner, was Avatar 2 does not come out until December 16th. So that's unfortunate because Avatar, the first one, was the top grossing movie of all time. That's the biggest blockbuster movie we've ever seen, believe it or not, over $3 billion of sales. So Avatar is going to be great as well as Aquaman also coming out this December 16th. And I don't think it'll take until December to see that next leg of the MOAS. But even if it does, it's very important to point out that the markets evolve very fast and things change around. So if you were still investing off the same investment strategy you did a year ago, it's probably not working too well. So you always have to adapt your strategies and take a look at things in a different lens. And to be quite honest, I know you guys really don't care how long it takes. A majority of you guys don't really care. So by the second half of 2022, we're going to start looking really good as far as the numbers that we're getting, the box office numbers, and that should put a lot of pressure on the short sellers of AMC. And as we do know, they have not covered. Short interest still at 19.26%. Shares that are sold short of 99 million. Share utilization has pretty much stayed the same, and days to cover is going up again. This is a ticking time bomb, like I've said many, many times. But as far as specifically next week and what to be paying attention to, it is earnings season, baby. Is the next big test for the market and value stocks in the week ahead. Earnings season picks up momentum in the week ahead with big financials like Goldman Sachs and Bank of America reporting, along with Procter & Gamble, Netflix, and many transport names. So Netflix is also going to be very important as well for a lot of your growth stocks, for a lot of your higher multiple stocks as well. So going to be interesting. I do think Q4 earnings are likely to be decent, if not good. But your first quarter 2022, that's when these earnings are not going to be looking so pretty. Comparing, the first quarter of 2021 to the first quarter of 2022, not going to look so good. So that's basically the situation here. All eyes are going to be on earnings. After that, the Fed meeting, which is January 26th and the 27th. But we do have that big expiration. That is January 21st. That is going to be Friday. So it's not the week of the Fed, and we could see a big move based off of that. Hopefully not see too much suppression because of basically fear in the markets because of the Fed meeting is not the same week as this expiration. Hopefully that makes some sense, you guys. We could have a little bit of breathing room to make that next move up. And we'll go over what the price target is and all of that in the video tomorrow. So that's going to be all. Love and appreciate you guys. Thank you for watching. I will see you in the next one.